Morning all. How are you all doing? Good morning, Steve, Evil, Adrian, Alex, Kennelly, Ryan. What the hell is the yen up to? I don't know. Morning, Baggy, Danny, Rodrigo, Martin, Virginia, Mark, JC. It's time. Champagne Pappy, morning, Paul. Long time no see. I was here on Friday. And all last week, and for the last couple of years. Haven't gone anywhere. Morning, God Morgan, Magnus, morning, Cadabra, Crossweether, morning, Easy, Amy, Lucas, Gregors. We're a lot of people here this morning. 53 people, look. Right, something on my monitor over here. It was on top of my head, so I had to get rid of it. How are we all doing? So, this morning, the arseholes in Japan hit the button. Some may say. Morning, Lucas. Amy, I can't remember what I've got up to now. There's so many people. Morning, Chucks, FTNet. So, yes, big moves on the yen this morning. I got out last week. Where's my pen gone? I got out here. Blimey, that was a good shot, wasn't it? I got out here last week. As I got out, that happened. And I was like, holy crap, this is it. And then that didn't happen. Then everybody screamed at me, buy it, buy it. And it went up. And then on Friday, everyone said, buy it, buy it, buy it. They're all liquidated this morning. Unlucky. But anyway, so this is not a massive move. It's a big move, but it's not, well, I say it's not a massive move. It's not as big as the previous interventions we've had. 2022 was, I suppose it's not actually that different, is it? It's 600 pips we got there, but the ADR was different there. The ADR at the moment is bigger. So we've got exactly the same size of move this morning, 512 odd pips. So it's not dissimilar to the two previous interventions. But obviously the Bank of Japan will not confirm that. They will never admit to doing it. And, you know, no matter how many times I say it, other people will say there's no such thing as an intervention. It's down to your personal choice and what you believe happens in these markets, doesn't it, at the end of the day? But I don't care who did it. Somebody pressed the button this morning and made the move. So if you go by history in the past, you will be seeing a drop now for the next month, 2 months. As the Japanese yen screams and powers up. However, historically, we always had an intervention at the 145 and 150 level. This time it was 160. So what's going to happen over the coming weeks? I have no idea. And I don't care because I'm staying out of the yen for the next quarter. Just until this thing's calmed down and we know what their monetary policy is, because the fundamentals have shifted on the yen now. We don't know fundamentally how they're going to control their inflation, whether they're going to move over to using interest rates or whether they're going to carry on doing this, which is what they've always done in the past. So we'll have to wait and see. But until we've got some stability in the yen, I'm just going to give it a couple of months off. I'm not going to stop trading the yen because I've made a massive amount of money over the yen, out of the yen in the last 5 years. So it's not something I'm going to take away from my portfolio. But until this situation we're in at the moment is clarified in some way as to know what the hell they're doing moving forward, I'm just going to sort of stay out of it for a few months. I want to see if they push the yen and if it's possible to push the yen, because we don't know. The monetary policy stance is completely different now to what it was. So we don't know whether this is the Japanese or not. If it is, the question is, have they got enough in the bank to actually do an intervention and hold it? Or is this a last-ditch attempt and the US dollar rallies? Don't forget the US, there's a lot of big institutions now calling for either a US interest rate drop of up to 1% by December or absolutely no interest rate drops this year and starting interest rate reduction next year. So it's that polar opposites. You ask one bank they'll say, yeah, it's coming down. They ask another bank and they'll say, no way, they're not doing that. This is going to massively impact whether or not the Japanese have actually got the power to drop this, because obviously if the US continues to rally because they don't drop interest rates over the next 3 to 6 months, which they're not forecast to do at the moment, there's absolutely nothing to stop the US dollar rallying. If that happens, this Japanese yen has got to do a hell of a lot more than the US. I don't know whether it's got the power to do that. We've got some volatility just coming in now. So typically intervention moves when they happen, if you believe in it, happen over multiple tranches, if you like, multiple shots. So it doesn't all happen in one go. If you go back and look at the previous ones, you have a 4-hour candle, a typical little pullback, a 4-hour candle, and then you get that continuation rally. Quite often you get an accumulation as the shock sits in, and then a bigger rally. So, up to you what you do with it. Nobody's got any idea what it's going to do today, but that certainly looks like an intervention to me, and it looks like it's continuing right now. So looking at the yen, they're asleep today. It's a bank holiday. Their banks aren't even open. So all the conspiracy theorists, and I've had plenty of you this morning and over the weekend, going, they can't do it on Monday because they're not open. Really? Okay. So yeah, if you're a conspiracy theorist, it's not the Japanese doing it because obviously the banks are shut. If you're not a conspiracy theorist, like myself, and you believe that it doesn't matter, you don't need the bank to be open when you are the central government with all the assets lying in the US, you can do what the hell you like any day of the week. But anyway, I've been fighting conspiracy theorists all weekend, and I'm really happy to see this move because 3 people really pissed me off over the weekend. They all screamed and shouted, buy it, buy it, buy it. You're an idiot for selling it. You're stupid. I hope you're underwater this morning by a lot. Anyway, it was a really nasty way to say it, but some of the comments I've had over the weekend, I almost didn't come on today. Anyway, I won't go through that now. So big moves basically pushing this down today. We'll see what happens throughout the rest of the day. You can judge the power of the yen by the other currencies. So obviously, as you can see, this is definitely yen buying. This is not US dollar weakness. As you can see from all the other yen pairs, they will all do the same thing at the same time, but you will get varying degrees of ADR. So hopefully we'll get a continuation move on this morning if you are still holding your shorts on it. If you are shorts on it, obviously. And if you're long on it, tough. Don't say I didn't tell you so. Anyway, so this morning, we have the German CPI coming out. Now, German CPI is released over 6 states. I said 5 states to somebody this weekend, but it's 6. And basically, it's drip fed to us. So this is why this will be an all-day event on the euro. So this is going to be quite a big one today because it's going to affect the euro in the fact that we've just had the Spanish come out actually at 3.3. In the fact that it's going to affect the euro in that the German economy is probably the largest part of the euro as well as the French. So we've got a large portion of the inflation figure for the euro being released this morning, but it doesn't come in one go. So what you'll see on Financial Juice is you will see the states declaring. I don't think we've had one this morning yet. No. So we haven't had one this morning yet, but you'll see the states gradually declare and then you'll get an overall picture. So what you tend to find is throughout the morning, you'll find the euro will power up and you'll get a gradual move which will accelerate if those CPI numbers are coming out very different to what is forecast. So the forecast is 0.6. It was a 0.4 previous. So they are forecasting a bounce. If that comes out as anything less than a 0.6 this morning, we will probably see some selling on the euro because that means that not only are they definitely going to be dropping that rate in June, there is talk, I think it's very unlikely, but there is talk about them even bringing it forward. So we'll see what happens with that this morning. But if that is bigger than 0.6, it may put a pause on the euro rate drop in June, which means that it will be slightly neutral to slightly bullish. So we'll see what happens with that. But that's your main news today. Tomorrow, we've got the GDP for the CAD and the unemployment cost index, which doesn't do a lot for the US. And then we've got consumer confidence and unemployment rate for the New Zealand tomorrow evening. It's a bank holiday in Euro on Wednesday. And then we've got ADP non-farm employment change, which is basically the precursor to the interest rates on Friday, which are there. If I could draw. So we tend to get volatility off of that, but you don't get an awful lot of movement most of the time because we're waiting for the unemployment rate to come out on Friday. So Friday is the big one, non-farm payroll day. As we know, it's a massively volatile day. Market goes absolutely nuts. It has a long-term impact usually on currencies, but not so much at the moment because we're concentrating purely on interest rates and inflation at the minute. We've got the PMIs coming out this week as well on Wednesday. So these are Purchasing Manager Index. Basically, it's the inflation figure for corporate. And then we've got FOMC Wednesday. So this is the biggest event this week, the FOMC press conference. This is where the Fed will lay out their forward guidance for the US dollar. 5.5% is what we're forecast. We know we're not going to change. It would be catastrophic if they did change it for everything, but they're not going to change that. So we're going to get 5.5 there. So you're going to get a load of volatility when the rate comes out. But this is what the market's waiting for, the FOMC press conference. So this is where we get the Fed's forward guidance as to what they're going to be doing with interest rates. We have a massive polar opposite forecast from different banks and institutions at the moment. And they seem to be changing on a bi-weekly basis. So what we're finding at the moment is the Fed seem to be pushing more towards a September-October potential first drop. We've got banks forecasting 1% by end of year, as I said earlier, which means that there's no way they're going to do it in September, October. And if they do, they'd have to be 0.5%, which is probably very unlikely. We've got others forecasting no drops in interest rate until next year. So every time we get the Fed talking, especially at the FOMC press conference after they've released the rates, we're looking for some indication of whether they think there's a chance that we're going to change that interest rate before the end of the year or not. And that is what is going to either drive or dump the US. So this is the key news release this week. And then obviously the unemployment rate, if they come out in the press conference and say things like, as long as we see the unemployment rate rising, dropping, that will give us confidence to reduce rates faster. And then that number comes out lower than forecast. You're suddenly going to get a massive move. Yeah. So it's all interlinked, but this is where you get your real guide as to what we're going to see over the next coming weeks. So that's your news this week. Weekend news, there wasn't a lot, not a lot at all. Obviously, the main news is this morning, which is just broken, which is the yen. Friday, we had Michigan, I'm sure. I saw some forecasts on Friday. Maybe it wasn't Friday. It might have been before that. But I was just going to look at those forecasts we had from Bank of America. No, can't remember. But anyway, so keep a very close eye on anything you see coming out this week to do with the US, because quite often the Fed drop little bits and pieces before the FOMC press conference. So we're just attacking the lower Friday at the moment. So that 200 and 300 ADR we had on Friday, something like that. All undone. This morning, 350 we did on Friday. 3 ADR, yeah. Right, let me just catch up on the chat and then we'll go through the pairs and stuff. Morning, Ismet and George. Had 400 ADR intervention without us. And some people are still in it. Some people have absolutely cleared up, which is great. Not me. And if I was still in it and I didn't get out on that rally, I would still just be back to where I was there, which was underwater by about 8%. So Or it was 11. I think, what was it, 11 when I shut it, wasn't it? So I'd actually be doing all right now. My break even was only down here somewhere. So if the intervention actually happens properly, I would have been out of it today or tomorrow. But hindsight, nothing you can do about that. Morning, Nav. Morning, Amy. Yen just starts power up again. Yeah, 140 pips down. Last 10 minutes. Yep. Good morning, gold. Don't do gold. Morning, Leo. Right. So we'll have a look at where everything is. So ADRs today, obviously ignore anything you see on ADRs today. It's all about the yen. There's no point in doing any real attempts at getting into anything. The reason anything is hit ADR today, pound US dollar, for example, already hit ADR, is because of this yen move. So everybody is now readjusting their P&Ls and their risk portfolios basically to take into account this yen intervention. So I'm going to call it an intervention regardless of what people think. I'm going to just something's intervening with the yen, whether it be the Japanese or someone else. I don't care. It doesn't matter who does it, does it? It matters it's happened. So basically anything you're seeing that is hit ADR or had sharp movements during Asia is basically currency being withdrawn from other areas and placed into the yen, which is how the intervention moves happen and how banks and obviously institutions readjust themselves. So if they see something happening like this, their P&Ls will change. Therefore, they need to readjust their positioning and their hedges as well. The hedge funds will all have to readjust to this as well. So you'll see an awful lot of readjustment of position sizing and direction on lots of currencies. So Aussie US, for example, things like that. There's no point in looking at this. It would have played out quite nicely, obviously, this morning already, but there's no point in looking at it as it being a particular move from the Australians, because it's all going to be based around what's going on with this yen or anticipation of what might come. So I wouldn't worry too much about the ADRs today. Obviously, if you've taken any of these, you've probably done all right. Yeah, I mean, that one's already done half an ADR. Aussie US has already done half an ADR as well. 26 there, that's half an ADR. So yeah, already done fair decent movements. These ones that already played out. But everything that is obviously off the charts is yen based. RSIs, same story. So a lot of this stuff is going to be off the charts, is Aussie dollar, is yen based. So you can't take any of these signals at the moment. If you've got EAs running, they're going to be wanting to get into stuff. It's up to you what you do, but I wouldn't be doing that. So yeah, I wouldn't be taking an ADR or an RSI extension long. Obviously, that's a 5-minute chart, but so any RSIs you're seeing that are going to give you signals in the opposite direction. So if you look at the hourlies, there's a good chance you're going to trigger hourlies today. They may well play out. It may come and retest. It may not. It may not stop. We've never seen. We haven't been in a situation where they've done an intervention with positive interest rates before. Everything's new here, so you can't use indicators to measure anything in this type of market, movement. Right. So what I'm going to do this morning is just whiz through all the pairs. Morning, Franco, and have a look at everything, where everything's positioned. I'm going to be making some changes in the live room from now on, basically. I'm just going to do analysis on the charts. I'm not going to be looking at my positions or anything that I'm doing personally, because it doesn't really matter what my portfolio is, what my trades are. I don't want people copying what I'm doing. I just want people to position trade. And I'm happy to do analysis on pairs and instruments that people are in. But I'm not going to be doing everything I do out there anymore, because I've had so much stick over this weekend. I've just decided not to bother doing it anymore. So happy to do analysis, give my point of view, look at people's trades as well. Anybody that's in position trades that needs assistance with anything, happy to go for all that. But I've had enough of people knowing better than me and doing everything better than me over the weekend to say I can't really be asked with it anymore, to be honest. So most people in here, obviously, I know absolutely fine. There's a core of people which just always want to get one up on you all the time. Doesn't matter what you say. Doesn't matter how much money I've made out of the yen. And I've said this to some people over the weekend. This is my third trade on a yen intervention. One of them failed. 66% of them have worked. I'm up 6 figures. But because it's gone wrong once, they know best. And to be honest, my life is so much more complex with people like that in it. I don't want it anymore. So if I don't show you what I'm doing, you don't know what I'm doing, you can't comment on it, can you? Not saying anybody in here, most of you are very, very nice, but there's a core of people that I really just can't be bothered to interact with anymore. And unfortunately, it's all around YouTube. So I'm going to do analysis. I'm going to show the setups and strategies that I trade. And I'm going to say there's an opportunity, but whether I've taken it or not, you're never going to know. So that's just the way I'm going to have to do it now, because I just can't be bothered with, as AZ's just said, turds. I'm happy to do a private room and I'll charge £5,000 a month for it if you really want to listen. Yeah, because I'm not interested in doing it for £5, because all these people will come in here again. There's certain people who have been on Forex Factory. They're old people, over 70 years old. You're in here, I know you are, because I've been following you for years on Forex Factory. There's people in here that are old hobby Forex traders that know better. They've never made a penny in their lives. They've system hopped for 15 years on Forex Factory. They're subscribed to 200 different Forex systems, yet they know better. These people, and there are a lot of them out there, when you put yourself out in the public domain, I don't know what you would call them, but basically the people that just, when things like this happen, when you get a call wrong, just make your life not worth it. So sorry to the people that love it, but can't carry on doing what I'm doing in the way that I'm doing it, because I also do not want to be responsible for other people's finances. I'm not qualified. I am just a guy that's been trading 15 years plus, and I don't really want to be a signal service. And I've said that many, many times. So if you can't see what I'm doing, you can't follow my signals. But I will still post charts of successful trades in Telegram and Discord, so that you can see why I took what I took, etc. And you can see all the analysis, basically. But it's going to have to be hindsight. So, yeah, trolls, basically. There's a lot of them out there, but nothing you can do about them, unfortunately. But, you know, I share everything I share because that's the way I learn, people sharing stuff with me. Unfortunately, there's just too many idiots out there, and they're never going to make it, you know, and I know most of these people are system hoppers, but it doesn't make it any easier when, you know, and, you know, there's many, you know, I've been calling this for weeks. It's happened this morning. Not one of the people out there that have trolled me over the weekend will go, well done, you called it. They will shut up and walk away now. Yeah. The fact that I've done it for 4 years, live on YouTube, shown my P&L and everything I've done and shown all the money I've made, doesn't come into the equation, does it, when one thing goes wrong? So, you know. So we'll do analysis, basically. Setups, strategies, all the stuff that I do on a daily basis, like we get 200 ADR on it this week, jumping short, that sort of stuff. But just not my trades, basically. So, but it's the stuff you want to look at specifically, let me know. Gold as well. I'm happy to look at gold now. I haven't got a clue about it, but I'll show you what I think might happen to it. And I know it's going to go up or down. Japanese bank holiday today? It is, yeah. Morning, Charlie. I made US dollar yen position, but got so bored, closed it, and then the fall came. Exactly the same as me, Franco. Exactly the same as me. Market does what it does. And that's what I said, you know, this is why I got out of it on Friday. You know, there's people that have contacted me over the weekend who are in 20, 30% of drawdown on the yen. And I've asked, you know, do you watch the live room? No. Why are you in 20% of drawdown on this? Well, I'm just holding it because you said there's going to be an intervention. I can't be responsible for idiots. I'm sorry. I'm not responsible for you losing money if you're an idiot. I shut this out with 11% loss last week because it's not gone right since February. I cut it. Yeah. If you can't cut it, you shouldn't be trading. I don't understand how people can get into such deep drawdown and then, I mean, it's immediate. It's human reaction, is it? You always look for someone else to blame. But I'm not going to be responsible for anything like that. You know, not my problem. You press the button. It's your account, your money. You deal with it. You don't want to deal with it? If you want to hold on forever, hold on forever. I can tell you what's going to happen, though. You can lose it all. But no matter how many times I tell people that, they just don't listen. They only listen to what they need to hear, don't they? Losers with cash everywhere. Yes, okay, I know. Showing your own performance using the EAs you sell was your unique approach. Yeah, but you don't need me, do you? You've got a back tester. Stick it in there, and it will tell you exactly what would have happened if you'd done what you'd have done. Lost 20% on Friday because of my greed. Yes, exactly. It's you know that's the thing. But it's a lesson learned, isn't it? When you get hit by that, that's basically, you know, one of the things that teaches you a lesson. Yeah, the market will continuously teach you lessons. I've learned a lesson last week. The yen is not as it used to be. That's what I've learned. So my decision-making process now moving forward for the next couple of months is not going to trade the yen at the moment. Doesn't mean I'm not going to trade the yen again. It means at the moment, I don't understand what the Japanese stance is, so I'm not going to trade it. That's my lesson. And it's cost me 11% of my account to learn the lesson at that point. Yeah, the market will continuously teach you lessons. Always. Amy, I made 46% in the last 4 months. Excellent. Yeah, see, this is the thing, Amy. This is the thing that people miss. Yeah, you're 46% up in 4 months. You lost 20% last week. You're 26% up in 4 months. Welcome to the 5% club. Yeah. Trouble is, there's 95% of the people out there that watch this stream and not in that club. They will never be in that club because they're idiots chasing the Holy Grail and system hopping. Unfortunately, 95% of the comments I get in Telegram, YouTube, and on here, and I've had to delete a lot of the comments on the last week's YouTube because they were just hideous. 95% of the people that watch the stream are idiots. And I can't deal with idiots. I can't help idiots. I can help a small portion of people that actually want to do this and realize it's not something you're going to get right all the time. As I've shown many times, and this is why I think people have watched my stream in the past, because I show it warts and all. Unfortunately, it just gets to the point where there's occasionally you get a wart and it's just something people won't let go of. So anyway, we'll see what happens, but you can't block people, Alan. Yeah. The trouble is there's 5,000 people in the Telegram group. I don't know how many people are in the Discord and how many people come and watch the stream all the time. But they're always replaced. There's a continuous stream of idiots, unfortunately, coming into this industry who are just looking for someone else to blame, basically. So you can't block them because they will be replaced by more. It's just a fact of life. But anyway. Sorry to hear you've got those losers. Yeah, well, it's just part of the course, really. But this is the thing. I do all of this to help people. Well, I think to help people. I hope it helps people. But, you know, at the end of the day, it's my money that I've got on the line and I want to use my own money in my own way. I can perform better if I don't have to be accountable, I guess, I suppose is the thing. Never let your account get into that drawdown again. Yeah. So we're just approaching the lows of the week of last Friday, which is where we had the 300% move. So watch this level here. This is lower day today that we've just tapped into. Let's watch this on the 5-minute chart. So this is lower day today. As you can see, we just tapped that level. So we'll probably get a pop out the lows on this. As soon as we break that low, we'll probably get a flush because they'll add into that position, but we'll see if we can break it. A little bit of bullish divergence forming at the moment. So we're running out of steam a little bit. So Friday's low is just down here, ever so slightly below where we've hit today. Watch it and see if it goes. Yeah, everything else has broken the low today. US dollar, there we go. So we just popped through that level quickly there. CAD Yen 225. 225 weekly range. We're on Monday morning. Market's just opened. We've already done 225% of the weekly range. Look at this. Just ignore it all this week. It's absolutely useless. There we go. We're through. We're through Friday's low as well and holding. So doesn't look like there's any any limit orders triggering at the lows at the moment. There we go. There's your little pop. So anyone that's gone for the pullback play is just flipped short. So we'll probably get a flush on this now. Where we're going, nobody knows today, do they? But just have to watch historic levels. So this is the low of last week, pound yen 225 AWR, sorry, weekly. So that's the low of last week, which is basically where we opened last week. So we're going to need to watch that level potentially for ads. Although I should suspect any orders that were there have probably been pulled now. We've got a high of 3 weeks ago there. Obviously, this was the week before. Absolutely tiny tight range. So there's nothing to look at really in there. So it's the high there of 3 weeks ago and last week's open basically are your levels. So just watch those on the way down. But like I said last week, this is the type of move you don't get out. Don't just hold it as long as you possibly can. Yeah, go and look at previous interventions. This isn't going to stop now, potentially. This is the yen saying no, and they will normally, historically, have carried this move on. So be interesting to see if any of the lovely gentlemen over the weekend that have contacted me are now going to tell me how much money they've lost longing this thing on Friday. One leaves two new in how it works, unfortunately. Paul, that's cryptic. Also, nearly 100 people in here. The growth is good. 95 today. It's not bad. When I came here 3 years ago, it was like 13 people. Yeah, but look at me compared to a lot of other people out there that have got thousands of daily stream viewers. Tiny. It's because I don't show something that makes Lamborghini money. That's why. I gained last year more than 7 years of trading thanks to position trading concepts. Yeah, cool. I'm not going to stop position trading. You know, there's nothing wrong with the concept. Things are wrong with people. They don't understand. You do help people. You help me a lot. Cool. Been watching you when I can over the years now. You turned me from a gambler into a thinking pro trader. That's good. Only took 4 years. That's faster than most. Just listening to you, not talking about your trades you take in the live room. Will you still do your monthly analysis? Probably not. I might do. I don't know. Yeah, for all you haters in the live room, keep watching the yen. Yeah. I'm not a vindictive person, but God, I hope they've blown their accounts this morning. I really do. What can you say? I called it. It was just a week too soon. Never mind. But anyway, right. So let's do some analysis. I have got some other plans as well for some stop loss based strategies that I'm going to start to introduce into my trading as well. Only on daily charts though. So I need to replace my old S&P swing strategy. I'm still not convinced that the S&P is back on track. Excuse me, for a bull market. I think it probably is. However, we're still not sure what's happening with this US dollar. I'm waiting for my platform to open, but it's not opening. I have double clicked it. I'm sure I have. There we go. So yeah, S&P, I'm still not convinced the S&P is back in a bull market. We've had a lovely run recently, which is fantastic. And we are now pulling back, but I'm not convinced that this is necessarily getting back into a bull market. The market structure is, you can't see it behind my head, but that is a low, a high, higher low, higher high, higher low, higher high, higher low, higher high. So we're looking for a higher low for that to continue in a bull market. But if you look at previous S&P movement, it's this pullback that we've had is very large in comparison to a normal bull market pullback. Yeah, normal bull market pullbacks tend to be like this. Yeah, look at the size of that. It's still twice as big. So the volatility, since we've moved out the bear volatile market back into what is more of a bull volatile market, and this parabolic move that we started similar to this move here, I think we're probably in this situation here at the moment. So I think we probably will get back into this this kind of movement. And if we do, I can turn the market reversal alerts EA back on with the S&P strategy and it will trade quite nicely. But what I think I'm going to do is introduce some diversification using stop-based strategies, which just work on ADR, basically. So I'm going to be developing those over the coming months, which I will put results up for. I'll probably put up a signal or something on those, you know, just so that people can see what they do. But I'm going to introduce that to diversify a little bit, because position trading is fantastic, but it has downsides. And at the moment, there's too much, not so much unknown, but there's too much stagnation at the moment with position trading, basically because we're waiting for these interest rates drops, and they're just not happening. They're taking an awful lot longer than anticipated. So I just want to introduce some diversification basically into the portfolio. So I will be covering those as well, and I'll cover those in the live rooms when I do them too. Just setups basically. But obviously risks and rewards are completely discretionary and down to, you know, people individually. So but anyway, so we'll go through the pairs. If there's anything specific you want to look at, let me know. But I will cover them all. Morning, Grateful Buster. All the long traders will wake up in a few hours with a nice surprise. They will. Did you cost me my Lamborghini? Quite possibly. I got mine. Risk management always, yes. For a little counter for all the bad messages you got over the weekend, thanks. I found you 8 months ago and trade along the bootcamp with the MRA. I'm profitable, up 70% of my account. Good one, Lucas. You're one of the 5% who's listening. The stop loss strategies you're looking at for Forex or indices. Anything, basically. There's only there's 4 strategies, really. There's only really 3 strategies. Range bound, breakout, which will either then work and become a trend or fail. Yeah. So you need a mean reversion strategy for range trading. You need a breakout strategy. And you need a trend strategy, which will get in on trend pullbacks. There's only 3 strategies on the planet. Yeah. There's only 3 ways you can trade. You can either be a range trader, a trend trader, or a breakout trader. And if you're a breakout trader, you will typically turn that into a trend. People like Wyckoff mastered the art of range trading, entering on a Wyckoff spring, adding on the top accumulation, and adding on the breakout into the trend. So certain people have mastered the art of getting in on a range, adding on a breakout, and adding on a trend. Absolutely perfect. So there's only really 3 strategies. How you get into those strategies is entirely up to you, but it's down to obviously risk management, because every strategy that uses stop loss will get stopped out and have a large stagnation. which is why I would only ever look at 4 hour and daily for any stop loss based strategies, because all of this is total chop. Yeah, total chop for weeks. And we know that because we've been sitting in a lot of this chop for many weeks. When you go up onto the daily chart and you go long off a double bottom and you put a 1, 2, 3 ADR stop on it, it's going to take a long time to play out, but you won't get stopped out very often. And the setups are very high probability, which is what most people do with the S&P. Most S&P strategies are pullback strategies and long only. Yeah. So there's a very famous RSI2 strategy that has been traded for many years and works absolutely fine in a trend. Range bound doesn't work. Bear market doesn't work. It's a trend strategy. Yeah. So it's just about finding those strategies and employing those strategies, but everything will be higher time frame based basically, and obviously statistical based. So I'll share them when I've got them all. I've got 2 strategies already that I have in testing, but I want to make sure I do some more thorough testing on them first. So, but they will work in anything. Yeah, market movement is the same on everything. Stocks is a little different. Excuse me, got itchy nose. Because stocks gap. Indices don't gap really. They do a little bit, but not anywhere near as much as people think. So they will work in anything, any commodity like gold, oil. They'll work in, I'm looking at one on the screen right now, one of the strategies playing out perfectly. But they'll work in FX as well. So one of the strategies is a baseline breakout with an ADR. Yeah. So you get a breakout of 1 ADR or more from a baseline breakout, add to the trend. So that's one of the strategies. And it will work in anything, because anything that accumulates, yeah, cannot accumulate forever. It will at some point break out. Yeah, used a lot in stock trading. So a lot of the strategies that I will use will be all the ones I used to use in stocks years and years and years ago, because they work really well. But there's a massive frustration element with them, obviously, with stops. Hedge trader, yes. No, I'm not going to do hedging. Hedging, I have never found an edge on. I've built multiple hedging strategies. I've tested them all. Can't find them that work. The problem with hedging is when you get into a hedge, when that one works, you get out of it, you take the profit, and then you try and get an extra position on to get out of the short. If that doesn't work, you need to re-hedge it. The problem is your original hedge that was that big, yeah, is now that big. So you'll have to take that breakout again. And then at some point you need to get out of the long. And then you've got to try and get out of these 2 shorts that you've got on. Problem is, if it doesn't do that and it continues to rally, look at US dollar yen. Yeah. What you end up with is your hedge now being that big. Yeah. What you're doing is you're locking in that amount of loss, and that can exponentially increase. There's ways and means of working them from the inside, but to be able to do that, what you need is the market condition to change from a trend into a pullback and then into an accumulation. If you don't get the inside accumulation, you can't play the inside hedge, which means that hedge gets stuck for months. Yeah. So hedging is a fantastic strategy when the hedges work within 2 or 3 trades. If you get one that gets a little bit out of hand, you'll be stuck in that, and that drawdown will exponentially increase for weeks and months. People that teach hedging strategies on YouTube and places like that, they will show you all the perfect scenarios. When you actually build an EA to test all of these strategies, you find the massive Achilles heel in them. Anything that goes into a trend, you never get out of it. If you hedged the US dollar yen, difficult to see where you would. So if you hedge the US dollar yen from anywhere here, which was back in December, you're probably still in it, because it would not have pulled back enough and accumulated enough for you to work that hedge to get out of it. So, you know, this your drawdown is that. You can't get out. Well, I haven't found a strategy that can. So, you know, this is why people love hedging strategies, because they are, in effect, no-loss strategies, aren't they? But the problem with hedging strategies is people assume this is how hedge funds do not hedge like that. Hedge funds are hedging the opposite side of another transaction on another instrument. Yeah. So if they're hedging corn, yeah, they've got access to a field of corn, or their customers got access to a field of corn, which is going to generate $10 million worth of profit if it doesn't rain. Their hedge is the other way on corn in case it does. That's what hedge funds do. They don't take a long and a short on the same instrument. Bit of a flawed strategy, but if someone's found a good one, stick it in the strategies in Discord and I will build a model for it. But I've built a model for everything I've found with it, and it doesn't tend to work. Drawdown control, so the market reverse alerts EA hedging strategy that uses drawdown control, that works, but it's taking losses constantly. So it's similar to a stop loss strategy, isn't it, in that respect? It's been a tough quarter. You'll get some stick. Yeah. Don't forget though, Thought Feeder. Yeah, just hosting trades won't teach people as much. No, you're right. Do I get paid for teaching? No. Would you like to work for free? No. Do you need to work for free? No. Do I need to work for free? No. Do I need to enjoy my life? Yes. I'll do what I need to do. Just slammed 200 on US dollar yen. Quick scalp. Which way, Franco? Long, I hope. If you just stuck 200 on it quickly. It's going down. Anyway. Learning process. Just, I used to see you cut losers. And I think, why not hold a little longer? The end move has helped me understand why you cut positions. We cut positions, yeah. It's why I cut oil last year. But like I said on Friday, I can guarantee it. In fact, I can guarantee it with 100% accuracy, because I have never had an instance where it hasn't happened. When I get out, it always does that. Yeah. When I'm in a squeeze and I get to a point where I go, screw it, I can't hold this anymore. It's just too big. Within 48 hours, go back and watch Friday's stream. You'll hear me say it. Within 48 hours, the intervention will have happened. Yeah, it always happened. And I don't know why, but if I could pretend I wasn't in something to the point of where I pretend I would have got out of it, if I just did that, I would be an absolute millionaire. Unfortunately, it doesn't work that way. Can you post your Discord link on WhatsApp? No. I don't use WhatsApp. Links are all going on the bottom. And they're on the website. My live account is up 18% with max drawdown at level 11. Good job. Really believe people get themselves confused. Flipping strategy, learning the latest fad scams. Yeah, and there's a new one out, isn't there? And there's a new fad scam which is gathering huge momentum, which somebody posted to me a couple of weeks ago. It's the Indonesian or the Malaysian something or other. Yeah, it's just another repackage of the same thing. Now people are using that, and they will find it's the same thing they've already been doing. Hopping, staying with it for 3 to 6 months, doesn't work. Hop off. Someone will repackage that, and you'll hop onto the same thing again. Stick to 2 setups and do well. Good man. Since 1st of March this year, trading just 5 pairs. Cool. I was thinking that with Swiss and yen, we could adopt the trend strategy. Yeah, you could. However, the problem with trend strategy, a trend strategy, and the strategy that I will trade on trend, or is the only way you should trade on trend, is you take the first pullback, maybe the second. Yeah. If you take the third pullback in a trend, the trend is probably going to end. Yeah. So look at a trend. By the time you have realized, and everybody uses moving averages to measure a trend, right? By the time you get your moving averages green, in this case, on this particular indicator, you've missed the start of the trend. You've missed 1, 2, 3 legs of the trend. Yeah. Quite often, the trend will then reverse. So you get into your trend trade just as the trend ends. If the trend doesn't end, you will need confirmation that it's in a trend, which means another push up, which you'll miss, and then a pullback. If that isn't the point where the market structure shifts back to the downside and you get in and you manage to get a long out of it, you've missed all of that. So you get into the trend here, which is fine. If something is going to trend, in this case, for around about 6 months. That's rare. Go and find me a 6-month trend. Very rare. There's not many of them about. So the problem with trend trading is by the time you've identified a trend, you've missed it. So the best way to trend trade is to remove the moving averages. So then what do you use for trend direction? You need something else. There's lots of other things you can use for trend direction, but moving averages are very good for trend pullbacks. But the better way to find the start of a trend is to find an accumulation, find a breakout with volume. We haven't got volume in Forex, so we can't use volume. But what can we use instead of volume? An extension above the normal average daily range, ADR extension. That pullback is the first leg, potentially, in a trend. Those are the first 2 legs that you should take. When you get the third one, not worth doing. Yeah. So if you start trading in line with the trend on the Swiss and the yen, who's to say that this is not the end of it? So, right, I'm now going to just trend trade the yen. What if this now goes into an accumulation for 6 months? What if this now goes down and then it goes into a large range like that and the moving averages just keep doing this? Yeah. Everything you see on your chart will change. So if you've got a trend-based strategy and you enter there because it's in a trend, yeah, you'll get a trade out of it. But look, just go sideways for ages then. And then you get a little bit more of a go up and then it comes down. You'll have got scared out by that because that was a small intervention move. And then it collapses down. So if you got into this trade here on a trend bounce and you had a stop loss underneath the lows and you wanted a 2-hour reward out of it, you've got to get to there. That took 3 months. Well, I don't know how long it took, but a couple of months, isn't it? Very, 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 very hard to trend trade. Mean reversion is much better because you get way more opportunities on mean reversion to get into trades on smaller time frames. But you're better off at the moment, in my opinion, just scrapping the yen just for the foreseeable, just because it's too extended at the moment and it's too, unreliable. We don't know what monetary policy is for the yen. I don't think the Japanese even know what their monetary policy is at the moment. This is why this has happened this morning. It's either them clutching at straws and it's not going to hold, or they have got the same power as they had in the past, in which case this thing's going nowhere but down for the next 4, 6, 8 weeks. But I don't know. So you're better off staying out of it. You're going to find the volatility as well will increase. If you go back and look at, I keep saying I'm going to do some analysis, and I keep talking about this bloody thing again. But if you go back and look at the previous intervention, yeah, what you'll get now is a couple of weeks of what the hell do we do now, guys? Followed by a Japanese news announcement. Yeah, and that. Yeah. But look at the volatility. Look at the tiny, 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 tiny candlestick movements. And look at the amount of movement you get after the intervention. So you would expect that ADR, which is 100 at the moment, to be 100, 150 over the next X months, because the volatility on the yen pairs is going to massively expand as it becomes a mainstream currency to trade again. If the intervention happens and holds and the market agrees and the US dollar doesn't say it's going to increase its interest rates, there's too many things going on that can affect whether or not these guys hold this move. Look at the previous intervention attempts that have failed. Yeah. Market got a kick because it got warned about that. Japanese haven't said anything yet this morning, have they? Total radio silence. There's nothing out of the Germans yet either, is there? Or is my feed frozen? No, there's nothing from the Germans yet either. So yeah, we'll see what happens with it. But, if you're going to become a trend trader on this, when do you enter the trend? Are you going to assume that's your peak formation high? Stop loss above there. Enter now. But crikey, look at the stop on it. Not easy to get into, is it? We'll see. Intervention wouldn't have happened if you were still in the UJ. I know. This is the trouble. If I was still in it, then, yeah, basically, that wouldn't have happened. Obviously, I keep looking, I keep saying they're watching me. I keep looking at, I've got my sensors for my VR headset attached to the wall. They look like cameras. That's why I keep looking at them. Fine. After all this exhaustion, are the markets going to be quiet for a while? Probably. I mean, the whole market is going to be moving money around today based on what's just happened. But it could be an exhaustion. This is what I've been saying, and I've said it in here since I started streaming, and even when I was doing my Zooms before I came onto YouTube. The only thing you have to go, if you watch the Bootcamp, there's a massive slide in the Bootcamp that says, look left. The only thing as traders we have in our arsenal to tell us any inclination of what might happen in the future is the past, because we cannot see into the future. Nobody on the planet right now can tell you if the yen is going up or down. Yeah. But if somebody tells you it's going up and it goes down, you're right. Yeah. That's what we do know. That's all there is out there, isn't it? So if you look at the previous intervention moves, historically, if they hold, you shouldn't be doing anything but that for 2 months. The following 2 weeks after interventions tend to be very volatile, very range-based, as the market is absorbing what the hell's just happened to their P&Ls. Don't forget, institutions have been doing that for months. This morning, they were kicked in the balls hard. They are underwater. Yeah, they will need to reaccumulate those positions back to a break even. This is why you get this type of movement. The market now needs to readjust itself. So what happens over the next 2 weeks, don't know. But I'd be very surprised if you see it completely collapse from where we are at the moment. This is, I mean, it's not as big as we've had. It could easily come down a little bit further. We got a massive baseline there, which we broke. Yeah, and then we've got a second base and a third baseline there. So there is this area we've got to today is this area of buying. So I wouldn't be surprised to see us do this with high volatility for the next week or so while the market decides what's coming up. But don't forget, this week we've got FOMC coming. Yeah, if the Fed put a spanner in the works, and if the Fed come out and say, sorry guys, unlikely, we're going to change the interest rates this year. If we get another bounce on CPI, we may well need another 0.25%. US dollar's going through the roof. Then what do the Japanese do? We don't know what they've got left in the tank, do we? Yeah, you can't predict anything at the minute. It's too unpredictable, which is why staying out of stuff that is highly unpredictable at the moment is the better thing to do, in my opinion. Pound is always going to move. US dollar is always going to move. Euro is always going to move. Yeah, the commodity pairs, Aussie, New Zealand, CAD, they're going to struggle to move, but they will be massively affected by conflict. We've got two massive boiling pots of conflict at the moment. So if you want to be super safe at the moment, you trade the pound, the US, and the euro. Forget everything else, because the Swiss, as we know, are unpredictable. They change their mind as the wind does. The commodity pairs are affected by anything that goes on anywhere in the world at any time. Yeah, so if you want to be super safe, there's only really 3 currencies, and they are all high services-based currencies. Yeah, financial services, all that sort of stuff. They have very stable economies, euro, pound, US, and they all are well known for controlling controlling inflation with interest rates successfully. Yeah, those are your core. So every single cross of those, without going overexposed, is safe. This, as we can see, not, is it, at the moment? So you just got to use your head, and it's very, very tempting to jump in, but you can't use a risk reward. If you used a risk reward, any kind of risk reward on this now, I mean, what's this move? 600 ADR. So let's say you're scaling into a position. Let's say it's only 1 ADR. you're using, not 3/4 of an ADR or half an ADR, and you decide, okay, this is going short now, I reckon, and you position trade it. If you're wrong and they return to origin on the US dollar wanting to increase interest rates, you're going to have 6 positions on this within the next week or so. Just not worth the risk. And to actually get a decent reward out of it, this thing is not going to move at this speed again, necessarily. It's going to move at this speed. Look how long it's going to take on a normal big candlestick to get anywhere now. It's going to be very hard to trade. So you just, if you're not in it already, just kind of stick it to the sidelines for a minute. Right, let's have a quick look at the rest of the FX world. So this week's news, we've got New Zealand dollar. We've got the unemployment rate for the New Zealand dollar tomorrow evening. We've got CAD GDP coming, and there's no other Aussie news apart from retail. So New Zealand dollar main mover for the Aussie and the New Zealand is on Wednesday evening this week. Tuesday evening. And then we're going into FOMC, which obviously will move absolutely everything. Everything will move off the back of that. We've got Orr speaking as well, doing a press conference after the unemployment rate is released. We've got very little guidance on the Aussies and the New Zealands. So we don't know really what they're planning to do with their interest rates. Oh, by the way, somebody messaged me and said they hadn't seen this update for a couple of weeks. For some reason, the caching system on the charting and table software that I use wasn't working. So these numbers have been stuck for 3 weeks. I don't know if anybody's actually really using them, but I haven't been using them much, obviously, recently. So I've updated the cache. They're all very different numbers now. But as I've been saying all along, the vast majority of stuff is in a holding pattern because we don't know what's happening with interest rates. So everything is still multi-directional, really. Apart from obviously things like the yen, which have been crucified. So you've got that is now working. So yeah, if you're looking at the fundamentals for the Aussie and the New Zealand, if we're going to look at the Aussie pairs, the 4.35% interest rate, we have no guidance whatsoever as to whether they're going to increase it, decrease it, or when. We haven't been given any information from them. And the same with the New Zealand. We're assuming, rightly or wrongly, that we're at peak formation on everything on these. So we're not going to go any higher on the interest rates. Inflation is coming down nicely on both, very fast now on the New Zealand dollar. So there's a good chance that we are going to start to see some bearish statements and sentiment coming out of the central banks. So the problem we have at the moment with every single currency is every single currency is forecast to drop interest rates. Dropping interest rates devalues the currency. So it's not a case of, is the currency going to devalue? It is. All of them are, because they've all appreciated based on the interest rate rises. The question is, who's going first and how fast are they going to do it? So moving forward from where we are now, Canada, we don't really know much about their interest rate plans either. And Aussie, obviously, we don't. So looking at the Aussie pairs, for example, the Aussie CAD, if the Aussies come out, if the New Zealanders come out and say this week, we're probably going to start to reduce our interest rates, the Aussies will usually follow suit. So if the Aussies drop their interest rates before the Canadians, this will be bearish and it will go into a bearish trend. If they both decide to do it within a month of each other, they're going to fight each other out and go into an expanded range. Because what will happen is when interest rates start to move, the volatility will increase because there'll be more certainty on directional bias. And then you're back to a normal market where interest rates are moving around. We haven't had that for 12 months. So with all the Aussie pairs, it's very difficult at the moment to analyze where anything's going to go, because obviously it is, we're sideways, very, very sideways, very range bound, just ranges within ranges all the time is all we're getting. So at the moment it's range highs, range lows, and you can see the sort of distances you're looking at. Market structure is beautiful, big moves, big pullbacks, big move, pullback, move, accumulation, drop, big pullback on that leg, that big leg up there, completely undone, big move down there, 50% retracement, big move up, 100% retracement, move up, 61.8 retracement. Market structure is beautiful. So you can kind of trade this, and I think all the Aussie pairs really in any direction at the moment, because any RSI extensions that we're getting, if they don't play out initially, we'll be getting up to some kind of range resistance where they will start to undo themselves. So everything basically same story as usual, I think, with the Aussies. Just moving up and down very nicely. So you've got a high coming up at the weekly there, which is 200% of ADR away from where we are at the moment. But we'll have to see what the market makes of the yen as to whether or not there's any strength left in any of these currencies to drive it any further today. So, or this week rather. And obviously, if we do get up to there around the time of FOMC and the US decide to say something either massively bullish or bearish, the Canadian dollar usually will follow suit. So if you get a big pump in the US dollar, you'll get a big pump in the CAD, which will make that drop very, very, very fast. So at the moment, not really anywhere. You had an entry potentially last week up there, but again, it went into an accumulation. And then we've had this little push on the Aussie this morning. So yeah, coming up to a nice range high, Aussie CAD. No extensions on the RSI. You are extended on the 4 hour though. Not very clean because of that massive news event that we had, which was the New Zealand, wasn't it? So we're coming back up into the previous news announcement, which may well act as resistance. So ranges absolutely everywhere, just different sizes. So look for support resistance bounces. Fantastic strategy, support resistance. Yeah. So if you play any weekly support resistance range, there is a 50-50 chance it will either pull back and then have a run up to break out, or it won't work. If it doesn't, you have a stop somewhere which you get out of. If it does, you just play a mean reversion back down into the range. Yeah. So very easy to trade weekly levels and monthly levels. Beautiful one there. Look, monthly bounce. We hit that. It bounced off, slammed through it, came back down again. So it depends where your stops are. And this is one of the advantages with stop loss strategies of using ADR. So if you're going to trade any kind of strategy on 4 hour or daily charts, if you're using 1 to 3 ADR, even if it does break out through your level, typically after it's done a breakout, it will revert, won't it? So good example there on the Aussie dollar CAD. Aussie dollar Swiss franc at the moment fundamentally should be weak. Which means Aussie dollar Swiss long. You've had that move last week. We are waiting to see what happens with the Swiss moving forward. We're at a beautiful rejection at the weekly high, so it's a lovely short opportunity to get into there. So nice double top rejection. With first time hitting that, you kind of ignore that, which was the conflict escalation in the Middle East. So the Swiss franc had a safe haven run, which obviously didn't need to happen because it didn't escalate. So yeah, lovely looking short. Obviously the trend is long. So this is a good example of, you know, what I was talking about with trends. You know, that move there to there is where the trend started. That was your first pullback, but it pulled down below the moving averages. So you'd be immediately looking for shorts, wouldn't you? But it's not, it's a pullback. So you've got to do this kind of trend trading manually as well. But got a leg out of it there. That's it. Very little else, because all you've done is gone sideways. You've had another little push up, another little pull down. Then you've gone down there. You would have been stopped out on anything you were long on. Now it's back up to where it was. And you're thinking, God, I was right. It was trending up. So now what do? You wait for a pullback and then you go long. What you find is the market structure is actually shifting short. The trend is changing direction. That's why it's so difficult to trend trade. So mean reversion at highs, good trade short. Yens, no idea. Aussie New Zealand, this one I'm still in this short at the moment. It's broken out again this morning, although I'm not sure if this move this morning is going to hold. So we've had the big strong push last week and pullback. That held. So I was hoping that we were going to get a lower high on this. We didn't. We got a push up on Friday and broke that high. So I'm on the verge of having to scale out of some of this as well, unfortunately, this week. I'm looking at ADR today to start scaling out of some of this position. It just hasn't given enough of a pullback to get a full escape. I did make money on that. I closed out half of my position there for a profit. Did some drawdown control on it, but I'm stuck in it still. So I think with this one, it's obviously due a pullback, but this is only a flag break long. It didn't even get, I don't think it even got to the 38 retracement. I think that was a 23. Yeah. So that is a flag break. Flag breaks obviously tend to happen in strong trends. So normal pullback, you'd be looking at somewhere between 38 to 71.9 is a decent pullback area in market structure. A strong trend will just give you nothing but flag breaks. So at the moment, it is strong trending, which is a signal that you want to be wary about this thing continuing to go where it's going. But if you look at higher time frame, it's massively extended and coming up to resistance. So this is the reason I'm getting out of a portion of this, because we've got this lovely high coming up at 150 ADR. So if it does push up today above ADR, I'm going to scale out of some of it because it is getting too hot. And if it gets above that level, I think we'll probably get quite a sharp pullback on it. But that's going to be too much heat for me. And you know what will happen when I get out? It'll be back down here in a week. Yeah. So it's massively extended. As we see, we've had no real profit take move on this from the banks and institutions. Normally when we get big extensions, we have at least a 38 retracement. Yeah. 50% retracement. This is why position trading works, because we're playing the bank's profit take moves. Banks don't take profit if there is a fundamental reason to trend. They pull back and they add, which is why you get flag breaks. Yeah. So looking for it to come up to these highs and then get a limit order trigger off of the highs. So we are just range bound at the moment. Yeah, we're in a long range. We've been in a range since March last year. So this is 12 months. Interest rates are not changing. We're not going anywhere. So at the moment, we still have no forward guidance on interest rates. There is no reason for this to be massively bullish against the New Zealand dollar, apart from the fact that it's a bigger economy. That's the only reason really you would expect it to be doing better. Both commodity pairs, both affected by oil, both affected by conflict, in a lower sort of stance to the Swiss and the yen. They are kind of safe places to put capital because they don't really go very far, very fast. But when this thing gets a fundamental bias, it will take off and it won't stop. So you just got to be careful with it. So this is why I'm going to start exiting some. But beautiful short opportunity if you're not in it up here. We are massively extended. Yeah. But we were massively extended there. We didn't get anything at all. So, every strategy, every indicator will have a failure rate. Yeah, you can go back in history and look at it as many times as you like and see 100% strike rate. There will be instances where it just doesn't work. This is where you have to get out. Yeah, so these are your points of no return. If you've been trading this for the last 12 months, you've made a load of money. If you've been in here for 12 months, you've watched me make a load of money. This time, it's not going to make a load of money. If that is more than that is a loss, you've made money. It's a long game. It's not something you're going to get a trade, it goes wrong, and then it's all going to fall apart. You've got to control your risk. If it means you take a quarter where you take a hit, you take a hit. So right now, this is squeezing hard. I'm hoping what we're going to do is get a pullback on this leg as they power up to drive up and test those highs. If they test those highs first, we're going to have to scale out of some. So I'm going to be watching this one very closely because I'm in it at the moment. So, but there's a beautiful opportunity coming up about 175 ADR for a short. You're going to find at least a pullback from that level because limit orders will trigger. Whether there's enough limits at that level to trigger a rejection and reversal, we'll find out when we get there. So we'll see what happens when we get up there. Aussie US at the moment, US dollar, obviously you've got to be bullish on it. Just get rid of that fib, because otherwise I'm going to have fib lines all over the place. Aussie US, very, very, very bullish on US dollar at the moment, which means shorts. So last week, obviously, we had a nice little bull run. We're coming back up into the CPI announcement. So there's a good chance that we'll get a drop on this one this week. It's all going to depend on what happens with the Fed on Wednesday. So, this press conference is going to be critical. But you've heard me talk about this many times. There's also the chance that the Fed come out and give us nothing. Yeah, they've done it many, many times. There's no reason why they won't do it again. So if they come out and give us nothing, the market's still going to have no idea where to go with the US dollar, which means it is neutral to bearish, because we know at the moment all we're doing is we're pushing back that interest rate every single month. We seem to be going, nope, 1 month back, 1 month back. If they don't come out and say anything about dropping that interest rate, I think the market will just continue to do the same thing and assume that it's going to get pushed back further. So that would be a slight bullish stance on the US dollar, which means I would probably want to be shorting everything against it, which is a short on this. We're nicely extended on the 4-hour RSI. Again, looking for a pullback from the highs. Yeah, works 95% of the time. You just have to wait. So we're in a beautiful propulsion move here, which was a good 8-hour solid selling, massive ADR move. Yeah, we just, again, flag broke into that and continued that leg down. So this is our first retest of this level. If this is going to be a high, low, lower high, lower low, this is where the lower high is going to be achieved. And then we'll push back down from that level. So again, but we, you're going to find out Wednesday. One or the other is going to happen on Wednesday, isn't it? So assume we're going to get a nice bullish move. If you want to get into it as a short, if it pushes up, you've got a resistance coming there and a resistance coming there. So that whole area, which is about 3/4 of an ADR roughly, is a resistance area where they have been selling hard out of multiple times in the past. If the stance there is not different to here, that is what we should see. So we should be seeing good short opportunities on this. And obviously, if this is going to hold market structure, this is where you want to be getting in anyway right now. So Aussie US looking good for shorts if it holds. Swiss franc weakness, obviously we know. CAD Swiss has been pushing up against it. Very crap trend on this. This Swiss franc safe haven run really threw everything out. The trouble with these runs you get, any kind of big move like this, so looking at what's happened to the yen today, looking at what happened with the Swiss franc when the escalation started to kick off in the Middle East, it screws every indicator you have. Every ADR, for example, yeah, ADR 10 is now massively skewed because of that. Your RSI is in a different place to what it was. Yeah, look at it, was sitting on the 50 line. It then got pushed down to the 30 line, and it took 2 days to get back to where it was before. Your moving averages are all screwed. Every indicator is screwed by this type of event. So when you get this, you kind of have to just sit and wait for the market to calm, don't you? But at the moment, it's bullish. If the US dollar is going to remain bullish, the CAD should remain bullish. If the escalation in the Middle East is going to keep being heated, oil should rise. CAD is an oil exporter. So again, they make good money when we have conflict. So it's more bullish than bearish. And obviously the Swiss franc, because they've dropped interest rates faster than everybody else without telling us, is bearish. So the bias should be long. So looking for long opportunities on this one. I would be looking for 30s or below on the 4-hour, and obviously anything on the hourly. If we get any decent extensions to the downside, it's not that. There isn't any. But any ADR hits to the downside, obviously, potentially good-looking long opportunities. But again, same sort of stuff is happening on this as it is on all. We are sitting in these ranges for weeks, just sitting around doing absolutely nothing. So just waiting, basically, for news events. All the ends, loonies. So no idea on them. Euro odd. So the euro, obviously, we've had Lagarde come out and other ECB members. Oh, that's good timing. ECB should be cautious about a July cut. So what he's talking about there is the second cut. Yeah, first cut in June is all but guaranteed unless we get massive bounce in CPI today. Obviously, we get the German CPI figures at some point. I can't believe we haven't had any release yet. Nothing. So none of the states have released yet. So if we get a massive bounce on that CPI number today, that is the only thing that could really damage the prospect of the euro rate cut. And obviously, cutting rates is bearish. Therefore, you should be looking for shorts. This kind of tells the story of our life at the moment, doesn't it? Nightmare. sideways mess. So we have broken down now out of this range that we've been in for two and a half months now. Yeah, so we've formed a range. We've been sitting in it for 2.5 months. We've just broken out short, and that's your next stop to the downside. So I'll be looking for pullbacks to get in short on this. If you want to take mean reversion trades, obviously, on the profit take moves on these legs, yeah, assuming market structure is going to happen. Nothing wrong with long in it, but likely it's going to drop. So be much more interested in taking shorts than longs. Any RSI extensions to the upside, if you get them, when you're in trends as well, if you've got things that are expecting to trend, you're going to find it hard to get 75 extensions on RSI in a trend, because the market, when it pulls back, you'll very rarely get above a 38 to a 50% retracement in a trend. The relative strength has got to be very, very strong to get you extended above the 75, 80 level. So 70, some people also have success with 60. I think that's a little bit too aggressive, but 70 on the RSI kind of is a decent pullback. So you might, if it's stuff that is specifically trend based, and you can adjust all this with the EA. So if you're using Position Trader EA or Market Reversal Alerts EA, just change the RSI, change everything to short only on euros. And then obviously you can set your RSI at a lower level, like 70 on the hourly or the 4 hourly as well, or maybe even less on the 4 hourly. And then that will get you in to those pullbacks in those legs down. So euros kind of all short. Aussie, we don't know what's happening with the Aussie yet. So very difficult to tell. Euro CAD, again, sideways. You know, we're in a range. Basically, we're contracting at the moment, symmetrical triangle contraction going on. So the market is contracting, ready to break out. We're waiting for some news to give us a reason to do it. So at the moment, I'd be looking more shorts than longs. So if we got back up into that propulsion gap at 125 ADR, have a look at Friday's high, another option. You've got weekly levels coming up. If it does manage to get a push out for some reason, unlikely, but if it did, obviously you've got short opportunities coming up there. But yeah, looking for shorts. So again, RSI extensions to the upside, ADR hits to the upside, looking for short opportunities on this. Euro CAD is kind of sums up life at the moment, doesn't it? Since the 24th of November, we haven't gone anywhere. Absolutely nowhere. ADR is down to 57 on this. Used to be well over 100. Dead. But when we get some kind of rate differential happening, we will get a movement. And the euro we know is going way before the US, and the CAD is unlikely to go before the US. Although everyone else seems to be changing their mind on that at the moment, because the US isn't moving rates. But if the CAD needs to, it will. So we need to just keep eyes peeled on the news. Euro Swiss, very hard to trade Euro Swiss because they move together a lot of the time. Because obviously Euro Swiss, same area, trade partners for financial services. Bias would much rather be short than long again on this one at the moment. However, the Swiss have reduced their interest rates without telling us. They will do it again, in which case then you will find that massive drop off very, very fast. Obviously, safe haven drop off would be that way on the Swiss. Safe haven moves will do that. So again, very difficult. So longer term bias, probably short. Just looking for pullbacks. So RSI extensions to the upside, ADR hits to the upside, looking for short plays. But, this doesn't move very much. Same as the euro pound. We don't get a lot of movement because we are very close trade partners. Yeah, so they're very range bound, 35 ADR, very, very small movement, very hard to make money, takes a long time to get in and out of positions. As you know, with this one, I got into this back here. Where's January? February. So I got into it here, long. I continuously banked here because it wasn't going anywhere. And I finally got out of it last week. Yeah. It took over 2 months to get out because the thing just goes into sideways movement. So euro pound, euro Swiss, not the best pairs in the world to trade. Again, Swiss franc, there's good arguments for not trading the Swissy at the moment because of the conflicts we've got going on in the Middle East. One big escalation, one missile in the wrong direction, one plane shot down that isn't who you thought it was. This thing will go nuts. All Swiss franc will, all yen will. So, you know, range bound, news, safe haven runs. That's basically what you're looking at with this. However, long term, euro, when the moves start, the euro move will be stronger than the Swiss, and you will get back into this kind of scenario again. Yeah. So go and look at what happened. COVID. Yeah. So when we locked down, basically, and the economics of the Eurozone collapsed because they work off of tourism, we couldn't go there. Yeah. The Swiss franc, being the monetary masters of the world, had no problem because banking services were very, very rarely affected by that sort of thing. However, everything economic is affected. They are just about to start dropping their interest rates. So, you know, you're looking at basically a pullback here on a continuation of this trend. So I would be very hard pushed to find it getting up there, but you never know. Again, we're assuming what's going to happen based on historical events. Again, we've never been in a situation where we've had an 18-month rally on interest rates out the back of a pandemic, followed by a 12-month stagnation period. Market really isn't going to know what to do with this, is it? So we'll see. But as long as it moves up and down, you can make money with position trading. So it doesn't matter what you do, as long as the market is using some kind of profit-taking mechanism, market structure to get in and out when it moves itself. So euro pound, very, very same sort of stuff as euro Swiss. At the moment, it's had a breakout. Obviously, we've had some news on the euro and the pound. Pound's been very erratic, up and down a lot over the last couple of weeks. So it doesn't really matter which way you get into this. Euro is going to go before the pound. We've got elections coming up in the UK, which is going to affect the pound. I suspect the pound isn't going to be far behind the euro on dropping that rate. So if you look at the fundamentals on it, we're sitting up at 5.25. Our inflation is coming down nicely, 3.2. We are forecast to be getting there definitely by next year, but towards the back end of this year, we should be very, very close to that. Bailey has come out and said, do not assume that we are going to wait for that to hit 2% before we go. We will go with interest rates before we get there because we don't want to overshoot. And this is the problem Lagarde is talking about at the moment. At the moment, it looks like they're going to overshoot and go below 2%, which they don't want. Yeah, so the pound will be more bullish than the euro moving forward. So long-term stance is shorts. So again, I'll be looking for short opportunities, RSI extensions to the upside, ADRs to the upside. Same with all euro pairs, assuming obviously everything carries on as it's going to carry on. Euro yen, no clue. Bouncing nicely at the moment. So this, I suspect, is it. So question will be, will we break out of that hourly bear move? Euro New Zealand. So again, same thing with the New Zealanders. We've got news coming up this week with CPI. So the New Zealand unemployment. So when the unemployment rate comes out, they're forecasting that to go up. Again, that another reason to start getting the economy under control as fast as possible, drop those interest rates. So, but at the moment, likely that the euro will go first. So we'll see it just start to cascade back down again. But we are again stuck in a range at the moment. We're in a very tight range. Good looking potential buy here at the moment out of this area. And you've got backup support coming up down here, which is 175 ADR. So, but look how far you're realistically going to get in a week. Anything over an ADR target at the moment is really wishing for it. So, you know, if you're getting into anything, you can get an ADR worth of bullish movement. That's all you really want to grab if you can get it. So potential for a little pullback there. Failing that, I mean, that weekly low is that market structure support resistance there. So you've got that whole area there, basically, which is buying. So long, if that doesn't pale out, good opportunity for entering a second. Euro US, same sort of thing. But the US dollar, obviously, we know is potentially going to be bullish. Or at least neutral. So there's a good chance that this will come down faster than the rest. Same with the pound US dollar as well. But again, we need to get something out of the Fed, which they're not really giving us. But as you can see, the stance for the last month has been bearish. Don't see any reason why that won't continue. That CPI number from the US was an absolute shock. We were not expecting CPI to have risen that fast, that hard. So obviously there's no plans for dropping interest rates right now. Next CPI number that comes out, if it hasn't dropped, we're going to get the same thing. And if the euro have come out and they're ready to do their interest rate drop, this is coming down twice as hard as that did. So there's a very good chance of short. So lovely looking short opportunity there at the moment. It's not extended again, so you're not going to get much extensions above that 70 level. If this is a pullback leg, yeah, the 24.72 zone really is going to be your big, strong pullbacks. Other than that, you're looking for flags. So like it's short from where it is. Lovely reversal alert went in on Friday, and we are retesting that reversal alert now, as you can see. So there's your reversal, there's your retest, there's your potential M pattern market structure short. We made a new lower low, although it's really range bound. So that's an outside bar, which is indecision. That day was that candle. Next day was an outside bar, which means the market doesn't know whether it's bullish or bearish. So today we could get confirmation that this is flipping over short, in which case then you want to look for pullbacks to jump in short. The pound pairs, very similar. In fact, the euro, all that euro analysis I've just done is very much the same for the pound pairs. So the pound and the euro will go fairly close together with interest rates, I think, at the moment. But again, we just need to keep your ears peeled on financial juice and see what the talking heads are saying. But as long as Bailey and Lagarde keep going on the current stance they're going at, we should be going first, obviously, way before the US do. So everything stands the same with the euro pairs as the pound pairs, because we tend to do very, very similar things at very similar times. So you're just looking for, I would be more bearish than bullish on the pound at the moment, unless obviously Bailey comes out and says something different. So looking for pullbacks above RSI extensions to the upside, ADR hits to the upside, double tops. Yeah, if we do get into ranges, because the market won't want to be bullish on it. It will just want to hold it until we get that confirmation coming through. But should go before the euro, before the odd and the New Zealand. So all of these are very much the same. Lovely pullback there. That is a 61.8 retracement. Yeah, if you stick a fib on it. Yeah, 61.8 retracement, reversal alert, retest. So potential shifting structure going on there. Pullback in a longer leg. So looking good for shorts. These are all looking good for shorts. Wrong line. So same with the pound Swiss. Again, it is bearish at the moment. We are just starting that move to the downside. However, again, same as the euro, they're both kind of bearish at the moment. So whoever's the most bearish is the one that's going to drop, which you don't know. But when you've got two bearish instruments against each other, you've got a lot of push and a lot of pull on news. So worst case scenario, you tend to get a jaggedy kind of trend that moves nicely and there's lots of opportunities to get in and out, or you get a range because neither of them has an advantage. So anything like this is usually pretty safe to trade, but can take a long time to get out. So, you know, that trade there, for example, 1, 2, 3, 4, 5, 6, 7, 9 days. So a couple of weeks on positions, it is not abnormal. And it'll be the same for all these pairs, the pound pairs and the euro pairs. So same sort of stuff. Again, there you go, reversal alert, retest, just gone into a range again. And this one's a bit more tricky. You're bang in the middle of a range, yeah. So whenever you're trading, Your range trading, you never take a trade from the middle of a range because you've got a 50-50 shot. If you're expecting a range to be formed, you've got a much higher possibility of the trade working out at an extreme than you have in the middle. The odds are still the same, but if that trade works out, your risk reward is that. If that trade works out, your risk reward is only half as much. So you always take range bound trades from highs and lows of ranges. Pound US, same thing. So it's pulling back at the moment. On that leg, we're at 50% retracement at the moment on the pound US. Euro US, again, we're very, very similar. See, they're the same pair basically. All the euros and all the pounds against the other crosses, they all move very, very, very similarly. So be aware of that with exposure. So that's all your pound pairs. Let me just catch up on the chat. Can you explain why Business News TV barely mentions FX, considering how big the market is? I don't know. Because they're all focused on the stock market. I don't know why. You do get news. I quite often I've gone downstairs, sat down with my wife watching the news in the evening and gone, non-farm payroll was absolutely mental today. You watch, they'll definitely mention it on the news because it moved 400% of its normal range. Don't bat an eyelid. Yeah, if Tesla release a new battery and their stock jumps 5%, everywhere. I don't know. They just don't pay as much attention to FX. It's a weird thing. I don't know why. It's the most traded thing on the planet. $7 trillion a day goes through the FX markets. Yeah, they just don't pay any attention. I don't know why. Ask Bloomberg. Ask them if they can start getting an FX section. On Financial Juice, I see some of the German CPIs. They come out. On Financial Juice, I see some of the German region CPIs, and they are all, are they overall slightly higher than previous? I don't see them. Not on mine. I don't know where you're seeing that. I haven't got them. We've got the Spanish, which are all down, or target. Yeah, I mean, when they come out, if they're all bullish, then obviously we'll likely get a slight bullish move on the euro as they are less less positive about an interest rate drop. But it's not. I can't see those myself. But unless you've got a different, you might have different settings in yours that I haven't got. There's nothing in there that I can see at all, not even in the FX one. So, don't know. Not for me. Right, Euro US, we've covered that one. So, New Zealand posted the image on Discord. I don't know. I haven't got that. 10 o'clock. 9:42. You're in the future, time traveler. Which way's the euro going? Your obviously time is different to mine. I haven't got those. So Saxony is up. Certainly, oh yes, North Rhine forecast. Bavaria. Up. Yeah, so they are all up. But 0.2 year on year. Don't know. Anyway, evil's in the future. So if you need to know anything about where the markets are going, he's your man. I don't know why I haven't got those. That's weird. I will refresh again, but I definitely haven't got them. So I'm assuming that your 10 o'clock is my 8 o'clock, my 9 o'clock. Week ahead, economic outlook was at 9:35, 8:35. So you're an hour ahead. I don't know. That's weird. I haven't got them. But yeah, they all are all slightly bullish, but market seems to be having no reaction. I mean, it's quite probable that they won't have a reaction to it because it is only part of the Eurozone CPI overall. We haven't had the French numbers yet. The Spanish are down. German are up. The Spanish don't have anywhere near as much weight as the Germans, but it does kind of cancel each other out. And we haven't had France yet. So there is a good chance that the market doesn't see it as anything concrete yet. And obviously what we've had happen this morning with the yen, the whole thing's in shock. So, you can see that the market is in shock at the moment. It's had a what the hell was that moment. And they're focusing very much on what the hell to do with their overall portfolios. The analysts will be running around like blue-ass flies all over the office this morning trying to figure out what you should do. So it's possible that we don't get any reaction to it. And don't forget, it's also FOMC week. Very often, Monday, Tuesday on FOMC week is dead because no big institution in their right mind is going to do anything today or tomorrow without knowing what that forward guidance for the US is going to be. If you start a load of positions off today, or you take a load of positions off today, and the Fed come out and either rally strongly against you or strongly with you, you've blown it. So you're more likely going to wait until that press conference comes out. You've got some confirmation, even if it is no change, guys. We still don't know. We'll let you know in June or May or whenever. At least then they know what to do. No change. Right. Now execute everything you were going to do yesterday because we know now what not to do. So it's quite possible that we won't get a lot of reaction this week. It's a massive week. FOMC week and non-farm payroll together is a big news week. So, we might find, sideways, which it quite often is. So we'll see. New Zealand dollar CAD. So again, the same as the Aussies. Look at the Aussie dollar CAD. Look at the New Zealand dollar CAD. You're going to find a lot of similarities between these. They're Australasian commodity pairs against the rest. So in effect, if we're going to get the bullish US, which we suspect we will, we should be looking for bear moves on New Zealand dollar CAD. Again, oil price. Again, oil dropped. It gapped down today from Friday. My oil trade that I've got going on at the moment is just stuck. Bearish. Lovely double top this morning, just shy of ADR. But realistically, you're not going to get much more than 150 ADR out of a move. Yeah, unless you get some news, in which case then go with the news, because the news is pretty much accurate at the moment, as you can see. So retest of propulsion gaps off news, great short opportunities. Again, stop loss based strategies. Yeah, risk reward, easy money if the market continues to do what it's doing. Same as those highs and lows. New Zealand dollar Swiss shorts, New Zealand dollar US shorts. Yeah. So again, the Swiss franc. New Zealand dollar Swiss is. Actually, that's not strictly true. New Zealand dollar Swiss, very difficult. New Zealand dollar Swiss, forget that, because that was a safe haven run. So that's your range low, that's your range high. You're bang in the middle at the moment. The Swissy is going to be weak and will be slightly weaker, possibly or probably, with the euro when that starts to move. So there is potential for that one to go long, but again, it's not really got any strength, no differentials that really would give it any reason to go into a strong trend at the moment. So range highs, range lows, good looking opportunities. So anywhere around the range highs and lows, good for shorts and longs. But right now, you can trade any RSI extension on it and you should be fine with it. But again, Swiss franc, hugely unreliable when you've got times of conflict and things going on. New Zealand dollar, US dollar shorts. Yeah, so no reason why we shouldn't continue this with the US dollar potentially not changing interest rates. And obviously our friend, the US dollar CAD. So as we know, we've got no idea what the hell's going on. Holy crap, that CPI figure was much bigger than expected. No reason why it shouldn't do that unless the Fed come out on Wednesday and go, forget that, guys. We think CPI is going to undo that and some. Therefore, we're still on target for September. All about FOMC on Wednesday. US dollar Swiss, again, I'm still in this. My average is here, 175. I just need a retest of that. I haven't had it. I'm stuck in it. I've been in it. I'm stuck. Nothing's going anywhere. Again, news, nothing. News, nothing. Got news this week. I'm really hoping it's bearish for the US. This isn't anywhere near as bad as my Aussie New Zealand from a drawdown perspective, but I don't need much to get out of it either. But as you can see, since the CPI, I've just had no opportunities to get out. It's sideways. It's just so frustrating. This is why I'm introducing, or I'm going to start to introduce some more strategy diversification, because I'm finding it frustrating as hell at the moment, position trading. It's doing very, very well. Every trade I'm taking is 1, 2, 3 positions out within a week, apart from the squeezes. But the opportunities are down dramatically. Yeah, we know that volatility is down 35% this quarter, year on year. There's no volatility in the stock markets. Well, there is volatility in the stock markets, but the volume's down. Volume's down in FX. Everything's range bound. The market is just scared to death at the moment because it hasn't got a clue what's going on. There's too much going on in the world, isn't there? It's a very, very tricky marketplace at the moment. But risk reward, you just got to stay on top of it. Basically, if things go wrong, you want to try and get out as fast as you can at the moment. Holding on, as we know, not a good idea. Crossing your fingers is not what I teach in the boot camp. Drawdown control is what I teach. Right. So US dollar yen, this low from Friday has held now 4 times. So this looks like to me the end of the move at the moment. So you have this candle here, which they broke the lows and rejected. So this area that they bought back out of, they have just added back in to it, or rather they have stopped selling into it. So we've got absorption going on at this level. So we know the market is long. Yeah, they probably put the brakes on here forcefully because, yeah, you've told us what you're doing. Fine. Give us an opportunity to get out, which is where we get that accumulation period, and then they'll let it go. So there's a good chance that is probably what's going to happen. Historically, that is what we've seen before in the past as well. What did that RSI get up to in the end? 93.4. Yeah, I mean, when you look at unprecedented, and there's that horrible word again, unprecedented events. Yeah, never seen it. Sorry, we have seen it twice. Guess what? Intervention. Only times it's ever happened. So we know now in the future, if ever we get to 93 on the RSI, on the US dollar yen, you sell the crap out of it and hold on tight. Yeah. So, yeah, so that, the 90... I've done. If you want to do an analysis on this, use the market reversal alerts EA or the position trader EA. Position trader EA is 1,000 times faster. Go and use either the hourly or the 4-hourly charts with a 90 RSI, 90-10 extension. Yeah, your strike rate is 100%. You won't be taking many trades, but when you take them with big risk. They work massively well. Yeah, it's again one of those strategies you can't trade it regularly because it doesn't happen, but when it happens, it doesn't fail. Yeah, 93 is obviously an abnormal level. If you look at all other pairs, all other currencies, yeah, that level, it's just doesn't happen. Yeah, it's almost like a black swan event, this trend that we've had against the Japanese, and that's why they do what they do. Yeah, but you do not get that level hit. It doesn't get hit. It's abnormal. Even the 90. Yeah. The amount of opportunities you're going to get. You got one there. Is that COVID? Yeah, COVID. Got one there. Lower time frames, you'll get them hit because a news event will do it pretty much every time. But yeah, 2 trades there in 4 years, 100% strike rate. Yeah, it's just one of those things on the US dollar yen specifically that we've had, isn't it? That is just doesn't happen. So there you go. But we know what happens after. So if this is the same pattern as we've had in the past, there's nothing else you want to do with it, but don't expect anything much to happen. And again, if you hold it short now and it goes sideways for 2 weeks, don't come complaining to me about your swaps. They're going to be bloody massive. Yeah, you know that up front. Going short on this thing costs a fortune. Differential is massive. So maybe come back in 2 weeks and press the short button. I don't know. But use your head. Your money. Do with it as you wish. Maybe I'll have some different settings on financial juice. Yeah, I don't know what your settings are, though. I mean, you would imagine if you go into the default Forex, you would see anything to do with Forex. And obviously, inflation is a big thing. So, I don't know where it is. Weird. You've obviously got some weird setting that I haven't got. A long-time friend asked me to help tech him build a trading floor so he can rent cubicle space to retail traders. Strange idea, but will help him. Why would you need cubicle space for a retail trader? You work from home. That doesn't make sense. I'd hardly most trade at home in their underwear, like me. Exactly. You've seen me get parcels. I don't trade in my underwear. I'm not that stupid. If there's a fire, I need to get out wearing underwear. And jeans as well. Yeah. Not just underwear. But yeah, so... right. That's all I got for you today. There's not a lot else, excuse me, to discuss, really. Obviously, it's all about the yen today. And it's all about the build-up to FOMC on Wednesday. So we'll see what happens with the rest of the day. But I suspect if you look at the high of this candle on the hourly, if we get back up to there, I suspect you might do all right just shorting from here because it's unlikely that they will get back up to there. Yeah, they've been shot. They've been told this is the proper... I told you, not the I tried to tell you. I tried to tell you there. You didn't listen. This is the screw you guys. Off you go. So if you look at this reversal support rectangle and the bottom of this propulsion move, which is obviously the injection by somebody into the market, that is a good level to start shorting from if you want to scalp trade. But, you know, this is just historical analysis. Yeah, no idea where we're going. No idea what's going to happen. We've never been here before. We've had intervention moves before or large injections into the market by somebody before. And historically, what's happened is this. But what will happen next? No idea. So I'm not interested in trying anything on this at the moment. There's no point. I lost another 2.5% on Friday on this move. So obviously, as you know, I got out here an hour before that, which was at 225. I think it was 225, something like that. And then as we pulled back up into it, I took another 2.5% short with a stop, got taken out for another 2.5. Done with it. Yeah. It's had enough of my money this month. I'm not giving it any more. So I'm pretty sure I'm right on what will happen next because that's what's happened in the past. But I'm not going to stick any money on it, basically. You can have a gamble trade. I was talking to somebody in Telegram about this. Can't remember who it was. but I've got trades on at the moment which are gamble trades, basically the oil trade that I've got at the moment. Yeah. So I don't see a problem with sticking a couple of grand or whatever is money to you that you can afford to lose and it not have an impact on you personally, right? An amount of money in an account, in a separate account, separate brokerage account somewhere, and just trade a single instrument. So single instrument trades. So that account, in effect, becomes the trade. Yeah. And this is what I've got on oil at the moment. I've got an account which has got $1,750 in it and it's going long on oil. There's nothing else happening on that. I am literally scaling into oil on it in anticipation of one thing and one thing only happening. Oil price rallying through the roof on a conflict escalation in the Middle East. Yeah. So that's the trade I've got on. If that conflict escalation in the Middle East doesn't happen and oil demand drops, what will happen is oil will drop. I will get margin called on it. And that's it. They will close those trades out. Yep. So the account is either margin call or money. That's it. It is literally set up for that reason. It's not scientific analysis. It's not technical analysis. It's not me having any foresight. It's me thinking, shit, it's going wrong in the Middle East. If that blows up like it did in Russia, we're going through the roof. That's the trade. You could do the same thing now with this US dollar yen. Yeah. What we've just has happened this morning is, in no uncertain terms, a measurable move, far bigger than anything we've seen in the last year. Yeah. Look at historically, what normally happens is not an awful lot for a couple of weeks and then the market collapses. Stick 2 grand, 500 quid, 20 quid, whatever it is, stick some money in an account. Yeah. And stick a short trade on. If it rallies up to there, stick another short trade on. If it rallies down again, stick another short trade on in case this is the time it goes. Build a little position for yourself. If you're right, brilliant. If you're wrong, they'll margin call you and close your positions out. That money, whether it be $20, $200, $2,000 or $20,000, whatever the amount of money to you is that you are happy to walk into a casino with and go red or black, that is the sort of trade that can make your year. If oil goes to the previous levels it went to in the Ukraine, I will be over 13, I think it's 13.5K in profit. Yeah. If it doesn't, I lose 1,700. That's a risk reward I'm willing to take. But I'm not using a stop loss. I'm just getting a position built in an account in the hope that something happens. If you put a stop loss in place, they'll take your stops out at some point before the trade plays out. So it's a margin call trade. Yeah, you can do the same thing with the US dollar yen now. If it double tops on this today, on that hourly candle, for me, that's a bloody good risk reward. You need to get in with a lot size, obviously, so that if it gets back up to there, that's your blowing account. But you could say, if it gets to there, that's my blowing account, and be super aggressive on it. It's entirely up to you, isn't it? But it's not a strategic trade in the respect of it's using risk reward and proper management of your money. It's a gamble. Yeah. And this is what I think a lot of people have been thinking position trading is. You get in, you hold on. At some point, it'll work. Doesn't, guys. Yeah. You know that. You've seen me in here cut stuff. And the reason I cut it on Friday, and, you know, you say to people, I did it here in the live room. I cut it. I'm out. Yeah. If you hold it, you hold it. It's your choice. I cut it because I didn't want to blow my account. People going in Telegram and Discord, oh, I blew my account on Friday. Yeah, it's because you didn't cut it. Flip a coin. If you get margin called, it's because you're gambling. Yeah, you shouldn't let your account get anywhere near a margin call. 20% drawdown is big. 20% on one instrument is huge. When I'm in 20, 25% on my account portfolio in total, I'm papping myself. Yeah. That's my level of very, very, very much discomfort where I've been for the last week. So you've got to cut it if you're going to do it. Yeah. And it is taught in the boot camp as well. Yeah. I've got videos on it. Got to cut it. But anyway, there's a good opportunity if you want to do that. But bear in mind, if you short it there, and it doesn't break that level for 2 weeks because they're waiting and accumulating their way out of whatever they've lost on that move, you are going to accumulate swap after swap after swap after swap. And if it's a big trade with an amount of money where you're going margin call or brilliant, the lot sizes are going to be big, the swaps are going to be huge. It's going to cost. Yeah, so just bear everything in mind. Yeah, do the maths. Use your noggins. That's head. I was slightly kicking myself for not holding the yen as it dropped, but then again, there's going to institutional traders at banks who've lost a fortune on this. Yeah, don't forget, every move you see in this market is an institution, right? Placing a trade. For this thing to do this today, there has to be, for that movement to occur, opposite parties taking the opposite side of that trade, going long. Yeah. So when this thing collapses, there are institutions buying the crap out of everything. They're going, yeah, bring it on, give us more, give us more, give us. Hang on a minute, you're not stopping, guys. You're not stopping. Why are you not stopping? Flip short, bang, massive loss. Now they're short positioned on it, going underwater in the other direction. Yeah. Banks and institutions are using the same styles of trading. It's position trading. They get in, they get out. They're an always in strategy. There's no stop loss strategies with that type of money. You get in and a directional bias. You are a position trader. So there are a lot of banks and institutions which have lost money there. And this is why you get accumulations. They will be able to use algorithms to long and short this thing over a period of time to make back whatever that loss was. When that's done, they'll be off. Yeah. So look for accumulation breakouts. Logically, the summer increase in gas usage will boost your trade. It doesn't work that way. We've got in the UK at the moment the highest petrol prices we've had for an awful long time. Oil's coming down. There's a massive delay in oil price to gas station or petrol station, as we call it in the UK. Well, there is for us in the UK anyway. It might be different in the US because we're not. I mean, we do produce oil. It's all out of Scotland, but it's all export for us, the vast majority. So yeah, there's a massive delay. I don't think. Anyway, if it happens in summer, I shall probably be out of the trade. Like I said, that trade on oil is not. I'm speculating oil prices are going to go up. I think oil consumption is coming down, and it's going to continue to come down because of electric cars and the way that we're producing. Just another push coming on the end. The way we're producing energy, but conflict requires tanks and aircraft. Tanks and aircraft require petroleum. Petroleum is refined from oil. Also, manufacturing requires huge amounts of it. And when you're in conflict, you up your manufacturing of arms, which ups your consumption of oil. This is why oil rallies during conflict, because the market is anticipating a rise in demand. So they buy it before the rise in demand, which means the move goes longer and faster and harder in their direction. But it's literally that. It's a little bit like 2 days before Amazon release their earnings, you just go long, because Amazon haven't said they've had a bad year. They haven't looked like they're struggling. Retail sales are up. 90% of retail sales go through Amazon. If retail sales are up by Amazon a couple of days before the earnings report, it's that sort of trade. It's either going to go really well or it's just dead. But go big or go home type trade. That's what this is. Trader Tom says, feed winners, starve the losers. Yep. He does. He's a scalper. And I totally agree. Totally agree. Add to your winners. Absolutely. Yeah. You should be. But that's with normal stop loss based strategies. Yeah. And you do need to do that. There's a video on YouTube somebody posted in the Discord channel about a guy that talks about adding to losers. Yeah. Averaging in. You go onto Bloomberg TV. That's what they do. All the banks, institutions, and hedge funds average into positions. Dollar cost averaging. You'll hear them say the terminology, DCA, dollar cost averaging. They all do it. They do it for the same reason that we do it. because they know there's market structure in profit takes on moves. That's all we're doing. We're doing the same. I'm just using an indicator to guess when they're going to do it. They know when they're going to do it, and they have the power to instigate it. The difference between us and banks is they know when that's coming. We don't. We have to use some kind of indicator that has predicted to a level of degree and accuracy in the past when the profit take moves have come, which is why I use RSI, because the relative strength of movement requires a profit take. That's why I use the RSI rather than the MACD, the CCI, the stochastic, or any other oscillator out there, because this one is based on strength and relative strength between two individual currencies. We have to use something to try and predict their movement. Distance. You can use ADR. If something's moved 4 ADR up without a pullback, you could use that instead. Yeah, instead of using an indicator. But they have the power to press a button and make it happen. That's the difference. We don't. So we have to guess. So that's what DCAing is. That's why they use that technique all the time on their trades, because at any point they either have another desk which knows a move is coming, because it's a commercial desk that has to execute a large order. You're going to tell the FX desk it's coming because you're going to need liquidity to do it, or they have the power because they have the amount of money to just move the market in the direction they want to. We don't have that luxury. Yeah. So yeah, absolutely add to your winners if you're scalping or using any type of strategy that uses risk, reward, and stop losses. Because to get, and this is where everybody goes wrong with risk reward, is to get a risk reward play like that is very hard to do when the market is doing this. Yeah, you'll sit in that trade for ages. But if when that trade works, you do that, you don't need to get here anymore. You need to get here to get the same amount of money. That's why adding to winners is so important, because you reduce your target distance by 50%. Yeah, so you don't need a 2R. You need a 1R. 1R is easy to get 50% strike rate on. What you've got to do is when the trade starts to work in your direction, have the balls to add more size, which brings your entry closer to price, which means that every time it pushes back against you, you pap yourself more. Harder to do. A lot harder to add the winners and hold them, because you go back into drawdown or break even faster with extra size that you've added. That's why everybody struggles with adding to winners. It's got to be uncomfortable to make it work. Go and listen to forgotten his name. Died recently. Dr. Paul. David Paul. I need to listen to David Paul's stuff about adding to winners. Yeah. I can't remember. There's an interview that he did about 6 or 7 years ago. And he said one of the things in there that is imperative, and you will never make money. And I thought, yeah, but he's right. You'll never make money if you do not add size to your winning positions. Because if you think about it, if you get it wrong 50% of the time, yeah, but if you get 5 trades wrong in that direction, and that's where your P&L goes, because you've got 5 wrong at the same time, the next one that starts to work for you, if you add another trade onto that, to get back to here is not going to take 5 trades anymore. It's going to take possibly 1 or 2 trades immediately just to get you back to a break-even position. Yeah. And then the next trade that works out, if you add to it, you get 2x to 3x return instead of the 1x loss. Yeah. It's an imperative part of any stop loss based strategies, which is why you'll find 90% of the strategies out there won't work, because they don't give you any way of adding into those winning trades. They'll give you something that has a 75% strike rate, like the one I just gave you there. Go and back test it. Get the position trader EA, go and back test it. Use a 90, 10 RSI, get in with 1% long. You could set the stop loss by using a 3% drawdown at 100%. Do drawdown control when you get 3%. Use 100% drawdown control, which means when it moves 3 ADR against you, it closes the position out. Yeah, go and test it. Won't lose. You won't get many trades though. But just imagine if on those 90 percenters, after it moved half an ADR to one ADR in your direction, you added another one on. And then it only moved one ADR in your direction after that. Yeah. Now that sudden that 2R becomes a 3, 4, 5R. Huge difference. But to do that, you have to have massive confidence in your system. You need something with a really decent strike rate, because those low strike rate strategies, like trend trading strategies that typically have somewhere between a 30 to a 35% strike rate, it's really hard to add to something that's lost 70% of the time. Your brain is going, this is not good. It's lost the last 4. I'm not going to get this one, am I? And it goes in your favor. What do? You break even, stop it, because you're scared about being the next loser. Comes back down, stops you out of break even, and it's your winner. So then you add when it breaks that level to try and get on the next leg. And that is when the market structure shifts to the downside and it stops you out. So you've just turned that winning trade by using a break even stop loss. Again, anybody that's ever made any money in this market has never told you to use a break even stop loss. Tom Hugard does it all the time. As I'm only using Tom as Franco's mentioned him in here. Go and watch Tom's stream. Go and flick through his stream and see how many times he says stopped out for break even on it. I can pretty much guarantee it's 60, 70, 80% of his trades are stopped out of break even. Yes, he's stopping the losses. But how many of those didn't actually do that, but did that? And they would have become 10, 15R winners. You never know, do you? Because if you use a break-even stop loss, you will get what you are asking for, a break-even trade. Because the market goes up and down and up and down and up and down all the time. It's going to come back down. It's going to hit that stop loss. Yeah. What you should be doing is when it's come down and taking you into drawdown for the 3rd time, go, right, it's definitely not going down, is it? I'll add more. That's what you should be doing. That's hard to do because now that entry that you had here, when it's done that from your entry and it hasn't stopped you out, when you do that and add one there, your entry now goes whoosh, whoosh, up to here. All of a sudden, a 2 or 3 pip drawdown is like, oh crap, I'll get out. No, it's just pulling down. You're right. It's a breakout, pullback, long. But you didn't. You got out. That's why people struggle with stop loss strategies. Very, very hard to make them work, isn't it? But we know that because we've hopped for a long time and ended up here. What probably crossed people, me as well, of course, is that what probably crossed people is that most of the time, soon after you cut it, it goes in your direction. Hence, you might start thinking on hold and hope. Yeah. But this is the, you will find so many courses out there on psychology, so many books on psychology. I can read a book on anything and become an expert in anything. Executing it is not the same thing. Yeah, I've said it in here before. I've read every book there is on candlestick patterns. I can challenge anybody in this room on candlestick patterns. What's going on the chart? I'm pretty sure I can tell you everything that is in every single candlestick here, what's going on behind the market, what it means. But executing trades based on knowledge is not the same as having knowledge. Yeah, you can be the most knowledgeable person in the world about an atom, yet at some point, someone's going to crack 2 of those together and you're going to find out that that's not the thing you should do. Yeah, so knowledge isn't everything. Execution and experience is what makes good traders. And this is why I've said many times in here, you need 10,000 hours in front of this thing to make it work. Because if you haven't got that experience of seeing these patterns play out over and over again and have it burnt into your retinas, your brain won't have the confidence to put the trade on in the first place because you'll be double thinking yourself. The reason I'm saying this is a good short now is because that's what's happened in the past. I have no idea. These atoms, I haven't cracked these together. Yeah. So, you've got to be able to interpret what you learn and execute it. And the psychological part of adding to trades is one of the biggest problems people have, which is where automation comes in. If you have an EA that just does it for you, you don't think about it. It will just happen. But you've got to not look at the charts. Yeah. That whole thing about, I've said in here before as well, If you have problems getting out of trades too soon, because let's say, for example, you're trading on the 15-minute time frame and you've taken a short at the range highs. Yeah. If every time it pushes up, you break even your stop loss. Yeah. Because you've had a candle close in your direction, you've had a reverse alert in that direction, it looks like it's going long, so you break even it or you close the position out and take a tiny profit. If you just move up to the 4-hour time frame, you won't get that signal. Your head won't do that, and you won't do it anymore. Simple as that. Take trades here, monitor them there. There's no price action here that tells me to get out at all. We've had a bear candle followed by a bear candle. That's where the 15-minute trade entry was. And it's been nothing but bearish. We've made a new lower low and a lower high. We've got a bear candle followed by a bear candle, and we're on an inside bar. This is going down. 15-minute time frame, we've just had a reversal alert long. Holy crap, I need to get out. No, you don't. You're in a trade. What you should be doing is, if it breaks that low, adding another one, because you're right at the moment. Then you can decide to move everything to break even, or move the first trade to break even and hope that you get a rally. Hope that a news event comes out. Hope something happens in the market that makes it go your way. At the end of the day, you've got no control over that. You know that. The only thing you can control is risk. Risk is what saves your account. Ability to close losers and add to winners if you're using stop loss strategies. Add to winners if you're using position trading strategies. You know, there's so many. How many instances have I had single trades where, you know, we've got in and I've got out? Well, let's not get out next time. Let's just move the trade to break even and hope that it sits there and take a break of a high. Add into your positions. There's nothing wrong. I scale into losers to get out and bank small amounts of profit. If you want to turn position trading into a add in, once you've got, let's say you get in, that doesn't work out, you get in again, you average in, when it comes back up to your original position, move this one to break even and then add. Do it. All that's going to happen is, if that trade is right and it does go 3 ADR in your direction over the next week, you're going to make 3 times more money. You've got to hold it though. So you definitely need to be sitting up here going, I'm getting out here. But you're not going to get out there, because if you're right, it's going to break that level, isn't it? So when you get that limit order trigger there and it pulls back, you need the bollocks not to take that off and hold it through that, because you are going to get it drop at that point, because there are orders there to sell it. That's why it came down. Hard. Very, very hard to do. Not an easy job. You know, this is why all the Lambo hunters out there get annoyed when things go wrong, because they don't get it. This is the hardest job on the planet. You're picking a direction which has a 50-50 probability on something that moves at random. I mean, another job that's more difficult. I can cut someone's head open, being a brain surgeon, having a knowledge of 5 years worth of brain surgery and 7 years worth of college education, and know what I'm doing. This thing, lunatic. Look at the US dollar yen. Why did that do that? Because there was a Middle East tension. Why did it do that? Because the tension wasn't there anymore. I know that because I've seen it 1,000 times. First person that saw that for the first time has panicked the crap out of them. Now they've got no confidence in their strategy that was long there because it did that. Scrap that, we're on to the next one. What are we doing it? Trade management is a skill of its own, yeah. Basketballs is the secret sauce. Balls are the secret sauce, yeah. But you can't teach people that. That's a experience thing, isn't it? Mark Douglas also said that trading is about execution. Trading is about doing it and doing. It's about repetition. All it is repetition. The problem is that people are looking for repetition with a strike rate that doesn't fail. That is the problem with repetition. It doesn't work. Yeah, it works sometimes. That low got hit. When you took that low, that long there, yeah, either you broke even on it or you stopped out on it. But you were right. How do you make money out of that? How do you get into that and stay in it. Like I keep saying, there's only one reason why you'd get out of it. If you tell the market to get out of it by placing an order in the market that says, get me out and take my money. It's the only reason you get out. If you hadn't have used a stop loss there, you made a killing. And then you shorted it at the top. Maybe you did, maybe you didn't. You didn't hold it through that, I can tell you that. Because every time it did that, you crap your pants and you got out. I did the same thing. Everybody does. Very hard. This is why you need to get in and get out and take small amounts of money out of the market regularly, but you have no clue which way it's going to go, how long it's going to take, or when it's going to get there. No one does, do they? Tough part. Anyway, I'll leave it there. I'll be back tomorrow. We've got live room tomorrow afternoon is 1:15 because we've got the CAD GDP figures. Oh, hang on. Here we go. Let me just cover this before we go. I still haven't had those German figures. Anyway, Japan. All right, let's start at the top, or the bottom, rather. Japan currency diplomat Kanda, no comment on whether there was FX intervention. Okay, so that is what we get every time there's an intervention. No comment. Yeah, it's like when you get arrested, isn't it? Did you hang about in that area at that time? No comment. Or did you or not? No comment. See the yes or no answer. Did you intervene or not? No comment. We will continue to take appropriate action against excessive moves. Did you intervene? No. But we will continue to intervene. Yeah, if you believe in intervention. If you push it back again. So we told you we were going to do it. We've done it. If you push it back that way, we'll do it again. What do you think the rest of the people with any kind of money to make any money in this industry are now thinking? If we go that way, it's going to go that way. So what should we do? Go that way. Job done. Thank you very much, Japanese. Speculative, rapid and abnormal FX move have had a bad impact on the economy, so are unacceptable. You guys kept doing that and we kept telling you not to. It's not unacceptable. We're not going to have it anymore, but we're not going to intervene and we won't take appropriate action again, continue to take appropriate action again, if you push it back against us. Yeah, I don't know how these people that don't believe in this, I don't know what they think. No one can tell me, if it isn't an intervention by the Bank of Japan, what it is. So if you can't tell me what it is, I'm going to go with the obvious thing, the thing that they say every time they're going to do it, intervention. But anyway, people out there just don't believe in it. I don't have a specific level in mind, but an appropriate Forex level in mind, about an appropriate Forex level. Yeah. So again, what they always come out and say, at 145, moves are undesirable. If we see continued movement, we'll intervene. We're not going to comment on intervention. There isn't a level we're talking about, but if you push us above, right, that's it. Doesn't take a rocket scientist, does it? New intervention level is 160. Won't go above that level. Guaranteed. Pretty much. Not guaranteed. Nothing's guaranteed. But if you factor in a short play now over the next month, 2 months, and you use 160 as a stop loss level, 163 to be safe, I'm pretty sure in 3 months' time, you won't be disappointed. However, I said that about 145, I said it about 150, and I said it about 155. Only because they said it about those levels as well. Now they're saying it about 160. Will it? Won't it? Don't know. But that is an intervention. And if people don't think it's an intervention, please tell me what it was. Because it looks like an intervention to me. Right. Okay. So I'll be back tomorrow afternoon at 1:15. Anything else you need, let me know. I'll be in Telegram and Discord. And I will be working on my other strategies and stuff, which I will obviously cover in here as and when I start implementing them. I'm building models at the moment. So, yeah, we'll see on those. But they are going to be stock-based strategies, but they're going to have whacking great wide ones. And they're going to be on high time frames. So I'm not going to muck about with silly little 5-minute charts because that's just craziness. It's pushing up again. Yeah, I'm so tempted, but I'm not going to. But if anybody does, let me know how you get on. All right, so have a good one. Anything you need, let me know. Otherwise, I'll be back tomorrow afternoon, 1:15. And yeah, I will see you then for the CAD GBDP. Have a good day.